trading mindset. All right, so any questions on trade management before we get started on this?
I had a
So it
question about
should be pretty
journaling.
quick. Yeah, go
Is
ahead.
is there any way you could point us in a place where we could like, is there a book or like anywhere where we could like,
Make a journal.
yes, to
All
have
right.
it properly organized?
Um, wait, what you said the last part?
To have like, it's like to have a book that could have it properly organized if there's something already there.
So there's a couple of them. There's actually one member that made her own. So you might ask her if she wants to share it, or I could see if I could find my own my old journal. But there's journals all over the place too. Um, but we'll see. Maybe I'll make one.
Okay, thank you.
All right, well, all right. So trading mindset. All right. So now here's a little explanation of your discipline. So you want to avoid analysis paralysis. What this is pretty much you're doing too much research, like you're looking at too many indicators, stuff like that. This is what they call analysis paralysis, right? So you're doing too much analysis and you're not doing enough acting, all right? This is why you want to avoid analysis paralysis. All right. It's the next one. Accept that the market is random. So not everything is gonna go as you plan. Um, you're gonna get stuff thrown at you from whatever direction, right? Sometimes you're gonna have you're gonna be in a trade that's going towards the upside, and here comes the market with yield curves rising, and it's gonna send the market to the downside. Now, this has nothing to do with oh, the market is against me, stuff like that. This is just the market is random. You really can't. There's so many things that go on every day that you can't just like expect certain things to happen automatically in the market. You got to accept that some things happen by random. All right. Next thing is cut out the outside noise. So some outside noise would be people telling you like, oh, yo, look at this. Oh, I think this is bad. I don't think you should invest in this. All that. Avoid all the outside noise. Always go with whatever you're thinking about on your own. All right. This is gonna be the biggest thing to become an independent trader. You gotta know how to trust yourself and just cut out the outside noise. Right. Don't worry about what anybody else says. Focus on what you see on your own, and that's what's gonna make you a better trader. All right. Next thing, accept the risk. So accept that you could lose, for especially with options trading, accept that you could lose 100% of the risk. All right. Don't ever get into a trade and be like, okay, I'm gonna lose. I'm expecting to get out at 50% loss, or if I lose a certain amount, then I'm gonna hold on to it. Like like a lot of people, they end up losing out on their money because they're like, okay, like if you guys think about it, when you're in a trade and you're down 50% or whatever, the only reason you're holding is because you still have that feeling that, oh, this thing is gonna go back up, it's gonna go back up. Like you're not accepting the risk, right? You still have 50% of your uh, capital left on this trade. You're kind of forgetting about it just because you don't want to accept that you're wrong. All right. So accept the risk. Um, Next thing, five, recognize when you're wrong. So this ties into this. If I go into a trade, one example over here, with Snapchat, right? And I saw that it was going up and it was going up. Now today I could have easily told you guys, oh yeah, it's gonna keep going up, it's gonna keep going up. But now I'm not. I'll be doing the wrong thing here, right? When I'm wrong, I'm wrong. I'll tell you guys like, oh, yep, the trade's not going is not going right no more. I'm wrong. I'm gonna get out of this position. If I hold on to this trade because I'm wrong, just because I want to be right, like, oh yeah, it's gonna go back. It's gonna go back up. Like this is just me telling. Like if I tell you it's gonna go back up, and the chart is telling me it's going down, I have a pattern and everything to go along with it. There's no reason for me to hold the trade. At that point, you're just holding on to it just because you want to be right on the trade. When I first started trading, this was one of the biggest issues for me. Um, I wanted to be right about every single trade, and I never wanted to accept that I was wrong, and I would hold on to losers way longer than I was supposed to. And this is very bad for trading options because if you hold on to these losers just because you want to be right, you're gonna end up losing 100% of your your investment. All right. So accept when you're wrong, get out. If it rebounds from where you were wrong, then okay, fine. Like, oh, maybe I got faked out. Um maybe the stock was actually still trending up. Whatever it is, based on my trade plan, I was wrong, and I'm gonna get out here. All right, it's completely fine to be wrong. You don't have to be right 100% of the time. All right, and then the last one, think of your next 100 trades. So a lot of people that take YOLO trades, they put their full account on the trade. If you're wrong, you went full account. Now you have nothing left to trade, right? For example, a good example of that would be this whole month. A lot of you guys, well, I don't know about you guys, but I know a lot of traders that probably blew their account this month, right? If you blew your account this month, you pretty much were trying to force um certain trades that weren't too clean just because you're trying to replicate what happened in the previous week, previous day, whatever it is. Um, you got to always think about your next 100 trades or whatever it be, 10, 15, 100, 200. Regardless of what it is, you got to think about what's going to go on with your next trades, right? If you don't have any capital to trade these next trades, you can't trade at all, right? Your capital is your biggest thing as a trader. Get all protected at all costs. All right, so any questions on this discipline part over here? This is pretty much a reality check of the markets. Any questions? All right, no questions. So let's go over this chart right here. So risk, loss, entries, and profit. Right? So traders should predetermine their level of risk and the amount of money they are willing to lose. So say for example, I'm going with something that has 2 days until expiration. Obviously, it's a very high risk if it doesn't go in my direction. I want to risk a little bit less money because if since this has such a high risk, I could lose a lot more very quickly. Right? So one example over here would be GameStop. Right? The level of risk, GameStop is very high. I only have 2 days until it expires. How much am I willing to lose over this 2 days? I put 1,000 into the trade. All right, cool. This risk part of this chart is pretty much put to the side. Now I can move on to the next one. Losses. Traders should be established rules on when to cut losses. Let's say if I was obviously my loss in this case would be 100% because GameStop is so random. But obviously, if it's still during the day, for swing trades, you got to be willing to lose 100% all the time, right? You don't know what can happen overnight, or even yeah, overnight the market is closed. You can't close your positions or anything, especially on options. You just gotta be willing to lose 100%, right? If you're day trading, then you could be a little bit more lenient with your losses. You can have percentages on it, since you could still close it. The market's open, but for swing trading, you can't really control your losses. All right, traders should establish rules on when to cut losses, preventing them from getting out of hand. Now, one way you possibly could prevent yourself from getting bigger losses is by hedging your positions. We saw that doing this for this whole week has been pretty good. SPY puts as a hedge, for example, to the downside. If you had upside trades, buy some SPY puts. Maybe sell some positions. Well, that's if you're going to be getting into selling options, which I don't recommend. But like you could look into doing spreads, stuff like that. These are all ways you can mitigate your loss. All right. Now entries. All right, traders should establish rules on when to enter trades. They should avoid chasing trades and entering trades prematurely. All right, so if I see the high of the day is $8 for well, $7.5 for AMC, and I think it's gonna go up because the chart is kind of trending up. Now, if I entered at 7.3 and I expecting that it's gonna break 7.5, I'll give you an example today actually. AMC today, right? Before I made this move up at the end of the day, its high of the day was 8.5 over here. All right. You guys see that? 8.5. Now I was gonna get into AMC earlier today. I actually had this part of this chart come into my mind. Stock was trending up. It made a new high of the day at 8.5. I said, okay, if AMC could break above 8.5, that's the psychological level, I'm gonna get into this trade. Right? So now I was actually planning on opening this trade early, but then in the back of my head, it told me wait until your level actually gets broken to enter the trade because it could possibly reject that point and then trend down. All right, so that's what came in my head at this certain time right here. AMC, I trusted my instinct. I never got into the trade until until it breaks above 8.5. Uh, it was moving up, and now it never really broke above that point, and the stock trended down. All right, so that's one example right there of why you should stick with your rules. Don't enter prematurely. Wait for your levels to break. Now, once my level broke over here too, at 8.5 broke around end of the day, we saw the stock start moving up even more. All right. Why do you hedge your trade on another stock, say like SPY? Why not the same stock you're trading? All right. So most of the time, like for example, I hedged on the Micron trade. I knew Micron had a lot of strength, but um the only thing that could have really brought it down was if the market reversed on it. Right? So most of the time, I like to hedge my positions with SPY because it's usually always going to be SPY that's going to pull the stocks down. Right? You could also hedge with the stock itself, but then I feel like sometimes if you're going to hedge with that same stock, as the stock moves up, you're going to be taking away from your gains. All right.
But
Now,
same thing with the spy too, right? I mean, like for example, you did hedge with the spy, and then you took some other, and the market went up, and then
yeah,
you got full profit. But then with the hedge, you got the last two, right? So
yeah, your hedge always gotta be smaller than your actual size of your trade. So if I take a trade worth $100, I'm not gonna put $100 on my hedge because now my trade has to go above 100% in order for me to break even. With my hedge, I'm looking for it to significantly be wrong, so that if things do go in the opposite direction, I'm looking for my hedge to be up anywhere around 200% or more. All right, so it'll pretty much cover a lot of my or at least cushion my downside. All right, so that was an example of why you shouldn't enter any trades prematurely. Now, for avoiding chasing trades, let's see if we find an example of anybody who chased a trade. All right, so say for example you didn't get into AMC, and you see everybody talking about it in the group chat, and it's just going up. You're like, oh my god, like I want to get into this trade, and you say, okay, I'm gonna get into the trade right here. Now, once you get in, AMC has a huge pullback like this. Right? This is one example why you don't chase a trade, right? If you miss the breakout, just let it go, right? When it pulls back, that's when you want to get back in. So in this case, if I got in over here, not only is the IV going to be high and the premium is going to be jacked up, yeah, I pay like $1,000 for a call once it's at this point. If it pulls back like this, one, your implied volatility is going to die. It's going to knock that premium probably down to $500. You're going to be down 50%, and then when it picks up, even if it gets back to this point, you're still gonna be down because the implied volatility is not gonna be the same anymore, right? You're still gonna be down probably maybe 10% or 20% by the time it gets back up to this point, right? So don't chase any trades. If you miss the breakout, just let it go. If you really want to get into the trade, wait for a pullback, right? So one example of me getting in, I didn't want to chase GameStop today. At the end of the day, when it started making the move up, let's see if I could zoom in. Okay. All right. So GameStop started making this move up. By the time I noticed, it was two candles higher already. So I was like, okay, I don't want to chase this trade. I want to wait for a pullback before I get in. All right. So GameStop gave me the pullback right here. It held its 9 EMA, and I'm like, okay, now I could get in. Right? It's holding its 9 EMA. It's most likely gonna continue up. So I bought into my one contract on GameStop. Actually, I did. I was trying to buy in at the view up on the 9 EMA bounce, and it didn't give me the opportunity. So I ended up buying in once it broke above this 63 level over here. All right. So I got in right here on the new high of the day break. I waited, at least waited for my pullback to happen, so I wasn't chasing at this point anymore. Right? If you ever enter in on these green candle chases, um, most of the time, if you're green, you're gonna get lucky. But if you're red, it's definitely gonna be because you chase a trade. All right. Now the next part, profits. All right. Establishing rules on when to take profits can improve trading discipline and avoid greedy or fearful trade behavior. All right. Ways traders can improve their trading discipline. All right. So everybody understand discipline now? I'll take that as a yes. Now we got about 20 more minutes, I'll say. All right, so here's a little curve about of what your mind really goes through when you're trading. So say you're a beginner, this is a beginner part. Now when you start, you're excited, you're making a lot of money, you have that beginner luck, stuff like that. You're thrilled, you're making so much money, your account is up 200% for the year already since you started. Now you're at the peak over here and you're just like, wow, like this I changed my life, blah blah blah, all that. Now that's the top of the curve in the beginning. Now you start reversing now. This is exactly what's going on with a lot of people at this point. Um, Pretty much a lot of traders started um when GameStop and all this stuff was going up. They were optimistic about the getting into this new skill of trading in the stock market. They started making some money. They're excited. They're thrilled. They're learning this new skill. They feel that they got a grasp of it. They have euphoria now because their account is just growing. They feel like nothing can stop them now, right? Now markets we start getting a choppy month like February. Uh, Market starts going down a bit. You start losing a bit of money. You start getting anxiety, right? Now you lose a significant amount of your profits from the month before. You're in denial, like, oh, there's no way I could lose all that money. I made this much money in that much time. There's no way, right? Now you're continuing down on this. Now you're gonna have fear, desperation once you start going negative on your account. You're gonna panic. Now you're gonna say, oh, I lost too much money. I had this much money. So now you're gonna think that this money, like say you had $10,000 in your account at this point, now you're back down negative to like say 2,000, 3,000. You're gonna be desperate. You're gonna be like, I need to go buy all these different signals groups. I gotta invest in different monitors, all this stuff. You're gonna find a whole bunch of reasons other than um, fixing your own trading in order to make yourself better, right? No matter how much money you pay, how much people you pay to train you and stuff, if you guys don't learn about yourself and how to fix yourself as a trader, you're never going to be successful as a trader, right? It all starts from yourself. All right, now you're down, you're panicking. Say at this point you blew your account, capitulation. You blew your account and now you don't know what to do. You're pretty much you're desperate, right? You're not desperate anymore. You're pretty much you give up, right? Now a lot of traders give up at this point. Um, they pretty much feel like, okay, the market is gambling. This is where you're gonna be saying the market is gambling, all this stuff, and you're not gonna want to trade anymore, right? Now this is all part of the process. At this point over here, you're done being a beginner. You pretty much got your fair share of the market's joy part. And now at this point, you're gonna understand what the risks are in the market. All right. Once you understand that risk and what really can happen with your account, and you went through all these emotions, now you're gonna be sideways for a while, learning about different types of risk management, stuff like that. Um, and then you're gonna start seeing some progress, right? So now you start seeing a slight move up. You start gaining some hope. Okay, now my risk management is working. I'm learning different trading styles, indicators. I'm learning about how to read the market sentiment, whatever it is. Now your account starts going positive, right? You're getting relief now, and now you're back to square one. All right. Now, right now we're at square one again for a lot of you guys, right? AMC and GameStop came back. You guys got in a really good trade, and it's gonna go up the roof. All right. So you guys are right back over here at the beginning of the cycle now, right? Optimism. Now, now you guys gotta keep in mind that once you get to this point of optimism, the next time you make this move up towards excitement, thrill, and euphoria, in order to prevent this downturn like this, you gotta stop it right here at the anxiety, right? Once you start losing a bit of money, you gotta start taking some size off the table, um, make a withdrawal from your account. I found that helps me very often, and just overall, just you're gonna have this at this time when you get to the euphoria part, you're gonna realize like now I'm getting overconfident, right? And overconfident is definitely gonna hurt you as a trader. All right. So this is the cycle of emotions as a trader. All right. So psychology. We're going kind of long over here. Everybody's good with this? You want me to continue or should we leave this for next week?
Yeah, keep it for next week.
Next week? All right,
Yeah.
that's one vote for next week. Uh, any more votes for next week? If you get about 10 or 15, I'll leave it for next week. After this, we pretty much have 1, 2, and 3. Yeah, that's it. Just 3 more slides. So you guys want to leave it for next week, or just knock out the 3 slides? These 3 slides
Yo,
right
let it
here.
run.
All right, let's run it. All right, so this will be about like probably 5-10 more minutes. All right. All right, let's knock them out. All right, cool. All right, so after you go through that over here, now psychology. So trading psychology is the emotional component of investors' decision making process, which may help explain why some decisions appear more rational than others. All right, trading psychology is characterized primarily as the influence of both greed and fear. And greed drives decisions that appear to accept too much risk. A lot of you guys will get greedy. You say, "Oh, there's no way I can miss out on this. I'm gonna oversize my trade, and I'm gonna be greedy, right? I take on a very high risk trade, and I lose a lot of money on that trade." All right. So here's another example of the cycle of market emotions. All right, pretty much just like the last trade, last slide. Successful traders recognize this as the point of maximum financial risk when you're overconfident. So whenever I realize that I'm overconfident, I'll make a withdrawal from my account and put it into my long term account. Right now, when it starts pulling back in the bear market, successful traders recognize this as the maximum point of financial opportunity. So right now, at the point that we're at right now, the market pulled back for the past 2 days, started making a bounce towards the upside. This is the point where you want to start making your investments. All right, when the market starts making a significant pullback, these are these are all points of strength, and you could plan for future move up. All right, so it's the psychological part. Now, neuroplasticity. All right, so this is the last thing I want to talk about before we finish trading. Um, so neuroplasticity, the definition of this is known as neuroplasticity. So pretty much similar, or brain plasticity. It's the ability of neural networks in the brain to change through growth and reorganization. These changes range from individual neuron pathways making new connections to systematic adjustments like cortical remapping. Right, so you guys probably don't understand anything I just said, but pretty much it's rerouting your brain to change the whole way you guys think. All right, so this is also one of the vital parts of trading. You got to change the way you think. All right, now here are 5 ways to increase and harness the power of neuroplasticity. You want to get enough quality sleep. So one big thing that was kind of affecting me as a trader, now that I'm on a new shift, I kind of was able to knock this part out. Your brain needs sleep to reset the brain connections that are important for memory and learning. All right, so if a lot of you midnight traders, you're gonna find it a lot harder, and this is the reason why right here. Right, you're not getting enough quality sleep. Best sleep is in the night, regardless of what anybody says. All right, your brain needs to sleep. Next part, continue learning and keep moving. So a lot of people, like even myself, where I'm at right now, I'm training you guys, but I'm not stopping my learning. I'm still learning from Umar. All my mentors are they're still there. I'm not done learning. Like I still have to learn about spreads. I still have a lot of stuff to learn about. But once you feel like you know everything, that's when you're gonna hit a wall and you're gonna see an impact on your account. All right. So never stop learning. All right. Even if you guys feel like you learned everything from me, just don't stop learning. All right. There's always more to learn. All right. 3, reduce stress. This is the biggest one right here. If you feel stressed, you had a breakup, you had a lot of loss of money, or just anything bad going on in your life that's stressing you out, try to either reduce that stress or don't trade. Right? If you have a lot of stress on your life, especially financial stress, you're gonna bring that same stress to the markets, right? If you say, for example, you have a bill that's due on the end of the weekend, it's a huge amount of money, and you have to make this money. But I have to make this money, so this trade has to go in my direction. I'm gonna oversize on the trade. Now you lose way more money. Now you have even more stress. All right, so try to reduce the stress in any way before you could bring it to the market. All right, next thing, find a strong purpose for what you're planning to learn. All right, so there's a lot of people that's gonna get into the market. And they're like, oh yeah, I'll give it a try, see how it goes, stuff like that. But they're not really having a strong purpose for what they're planning to learn, right? They're not committed to it. If you're not committed to whatever you're trying to learn, your brain is not gonna really take it serious, and you will never learn it. All right. And then the last one, read a novel. I don't really like to read myself, but if you think about it, all this reading I'm doing on online, it still counts. All right. The only reason why I don't like reading books is because I don't like the smell of it. All right. So I read everything online. All right. So I think this is the last one. Any questions on neuroplasticity before we go to the last slide? No questions. All right. Last one. So this will be wrapping up the training. Just change the way you guys think. All right. Don't don't stick with this fixed mindset and I give up easily. My potential is predetermined. Failure is limited of my abilities. Like this is all fixed mindset stuff. All right. You guys don't have to live in this mindset. You guys could do anything you guys want if you put your mind to it. All right. This is what my mom even told me ever since I was little. You could do anything you want, as long as you put your mind to it. Especially being in the USA, you guys really have unlimited opportunity. So you don't really have an excuse to just be where you are in life. There's always room for improvement. All right. Um, and also feedback and criticism is personal. It's not personal. That's being in a fixed mindset. If somebody gives you feedback, if they tell you, "Oh, I think you should fix this," or "I don't think this is good," "I think you should go learn to drive," stuff like that. This is all criticism that's trying to push you to be a better person. So stop being in the fixed mindset that think that, well, people are being disrespectful to you. Sometimes they're just trying to help you be a better person. All right, and that's a fixed mindset. All right, and then here's a growth mindset. I like to try new things. I can learn to do what I want. Failures offer opportunity and growth. So for me, if I never did this Discord over here, I would never know, right? When I started, I said, all right, I'm gonna try it out. I'm gonna see how it goes. Um, I know for sure a lot of people are gonna benefit off of this, so this is why I did it. All right, my intelligence can be developed. I embrace challenge, and this was a challenge for me as well. All right, and I learn from feedback. I keep trying and never give up. That's me for sure. I never give up at all. I'm inspired by other people's success. So I was inspired by Umar's success. Hopefully, you guys are inspired by mine. And my mistake helped me grow. And I know this will help me even though it is difficult. All right. So that's pretty much it for the training. Hopefully, you guys learned a lot in these past 3 weeks. Any questions on the training or feedback?
This is definitely awesome. So thanks for taking time and putting all this information. So I mean, definitely need to execute, and that's come out with a great plan. And thanks for this info.
All right. Thank you. All right. So let me stop the recording here.